Hey, what's up, everybody? Welcome to the show. I'm very excited to share with you this episode. Today, I'm going to be talking with my friend, Ashley Shepard, and she has been an integral part of my personal team for the past few years now, and has helped me to navigate tax code. Now, I know when you hear tax code, you're thinking, oh, wow, that's super duper boring. But when you have someone as amazing as she is at what she does, it really helps you to navigate the ins and the outs of what, in my opinion, can be some of the most confusing things that are laid out in front of us as professionals, as business owners, and as people. So, without further delay, I hope that you enjoy my conversation with Ashley Shepard.
Yeah, I'm Ashley Shepard. I am a CPA. So we help health and fitness entrepreneurs get control of their money and pay less in taxes and keep more in their pocket.
How did you first decide that? How'd you get into this business and then decide that, you know what, I can do a better job on my own? Or was it just right out of the gate into the kind of private sector?
Yeah. No, I was actually working at a firm for a few years and learning all sorts of stuff. It was a great experience. And I went through my own like fitness journey myself, where I became obsessed with like working out and all the things, nutrition and exercises and everything. And I was actually considering to become a personal trainer, which I'm laughing now because science is not my skill set whatsoever. So I'm like, well, I'll be starting at ground zero and I really struggle with science. So maybe I shouldn't do that and I should just stick with what I know and actually like do it on my own, start my own business, but focus on helping the people in the industry that I'm like really passionate about. Cause then I'm excited about that. So
Yeah.
started Monday Muscle. The name just kind of came to me and, started working with like trainers and gym owners and everyone in that space. And it's just so much fun because I'm actually passionate about what they do and how they're helping people. We have we're related in the terms of like what we value and what we like to do and stuff like that. So it's been really great. 5 years in now. So
Yeah. Well, I can attest that working with you professionally, I mean, you've been instrumental in helping me to stay legal. I, I tell my friends that are a lot of in the same industry, in the fitness industry, they're like, so when should we talk to Ashley? And I'm like, well, I can always introduce you. They're like, what does she do exactly? I'm like, well, the level of service that I have is I can send her an email and ask her if I can do something. And she says, don't do that, Phil. Or she gives me a thumbs up emoji back. And I'm like, all right, proceed forward. And that's extremely valuable because what
yeah,
a lot of, I think it's really valuable what, well, obviously the service that you have, but most trainers, when it comes to most fitness professionals, when it comes to hell, most people, when it comes to taxes, there's this big
sure.
fear. And I'm one of those people also. And we just kind of like, I don't know, maybe.
Yeah.
And having you and your team in our corner has just helped us to expand. And we're just so grateful to have your expertise. Um, so, kind of pivoting on that, not pivoting, but on that same subject, why is the tax code, why is it so bloody confusing? Like, why are all the forms, why don't they just call them, I mean, you got like your average W-2, and then there's like an
Yeah.
EZ, 1040 EZ. And what is the system of the nomenclature? Is there even a system? And is it designed to intentionally
Yeah.
confuse you?
Yeah. I mean, I think they
Like, yeah,
intentionally
it is because it feels that way.
yeah, they make it complex. Obviously, the tax code is written by attorneys, and the language is not clear and easy to understand for the average person. So yeah, they make it very complex and hard to understand, and they do that, I think by design to. If you don't really understand something, you don't know, and you have that fear, and you're probably not going to execute as well. But that's why you hire a professional who can actually interpret and take the tax code and the forms and like, okay, I know what that actually means, and like actually turn into like English for you, or whatever language you speak, to like actually understand like what it means and what you need to fill out and what you need to provide and all of that. But yeah, I think it's definitely it's kind of like a game. You need to learn how to play it, and what you can do and what you can't. It's all in there. It's just kind of like a foreign language. So yeah, it's
Yeah,
definitely kind of worth
that.
time.
And does someone need to? Is there a textbook that you'd recommend, or is there like a YouTube page? Do you have a YouTube page? Because that would be a powerful tool for a lot of people. I know you put out a lot of kind of short form videos on your Facebook page.
Yeah, I would
But
say that I have a YouTube page. I would say I would say it's coming soon, where you'll have
okay.
more content. But I think you can get a lot of great information from YouTube from other people on there as well. It's just kind of determining, just because someone says something on YouTube or TikTok or Instagram, it is a short bit, and it's not the full, like, this is how actually to apply it. This is when it actually can work for you versus when it can't work for you. So
Right.
I would say probably trying to find a couple people that you can trust, that you can kind of work with or follow. Like, there are actually a lot of accountants who have online groups where they will provide their education, their experience to you to learn, so you can start like learning things and figuring it out. And that may be a start if you can't like go out and hire someone to like do the stuff for you. There are some good books out there. Tom Wheelwright writes a good book it's mainly about rethinking about the tax law, and like how it is just a bunch of ways you can take advantage of the tax law, and like how to actually do it. Mark Kohler writes some good books as well, where it's like very easy to understand for anyone. So like he has a couple of books that I would recommend as well.
Okay.
Yeah, so finding people like that online who they know what they're talking about, and they make it easy to understand and actually somewhat exciting. So I would
Right.
say
Right.
those two
That's a key
sources
word, I think.
are,
Yeah.
yeah,
Okay.
yeah.
And kind of piggybacking on that, how would you go about finding a CPA that specializes in helping small businesses? Like what kind of things would you look for? What kind of things would you ask? Because it just,
Yeah.
you know, there seems like a lot of people that are just send me $700 and I'm going to do this, and you might get a few dollars back.
Yeah, I think looking at how the person is interacting with you. So, you can search or you can get referrals of, CPAs or accountants that specialize in, there's a ton of accountants that do small business taxes and accounting and stuff, tons of them. I would say that the characteristics that I would probably look for if I were looking for one myself is their communication, because that's a huge issue in our industry. Is they don't like to communicate. They don't like to communicate timely. They communicate in a way that you don't really understand what they're saying. So that's like number one, is how are they actually
Like,
communicating with you?
do you mean like speaking tax code to you, or just getting back to you whenever they
Oh,
want?
both. Yeah. Like,
Both?
are they taking, are they ever responding to you on time, or are they like taking weeks to get back to you versus quicker responses? And then, yeah, also, how are they, like, if you ask them a question, are they throwing out like tax form code to you? Or are they like
Right.
trying to explain it in a way that you would understand, that makes sense to reassure you? The second thing I would look for is, are they asking questions about you, right? So, yes, you need to be asking them questions to understand, like, is this the person that can best help me? But also, they should be asking you a ton of questions so that they can really understand you and your situation, because everyone has different circumstances. Your business is totally different than someone else's business, and they need to know, because every little detail with taxes matters. So if they're not
Hmm.
asking you a lot of questions, if they're just kind of like answering your questions and like, well, if you want to work with me, this is what it looks like, but they're not asking you anything about you and your business, to me, that's a red flag. That they should be asking you lots of questions to understand your situation. Um,
Okay.
and then also, I think that if they're focused on um, some accountants are focused on compliance only, like, hey, we'll file your tax return for you, submit your sales tax return for you. They also need to be talking about, some opportunities like, oh, hey, well, we could probably save you this amount by doing, like, what about this? Have you heard about that? Well, we could help you implement that. So like having those conversations, are you just trying to take care of the compliance piece, the things I have to do? Are you also trying to help me save money? And so that's one big thing that you'll want to look for as well, is the person actively trying to look for opportunities to help me save money. You'll pay more for that person, of course, because they're coming in with a different level of education and experience, and they're gonna, be an ROI for you. So finding someone like that is gonna, better serve you, I think. So.
Okay. And I've got to say that that is one thing that you are a master at. You're the crusader of staying on with your finger on the pulse of what is being published as far as what's allowed to do in this business. So I mean, I realize you're talking about yourself, and I think it's absolutely true, um, and I appreciate it very very much. Um, so kind of backing up a little bit to more of a meta question. Why does it feel like such a game, with like a guessing game? Like the IRS is like, hey, you owe taxes and we want you to guess how much. And you're like, $200? And they're like, no, here's a fine. Why is it not just, if taxes aren't auto deducted and you're, a W-2 employee, why is that such a back and forth? Why can't it be much more concise?
Yeah, I mean, well, I feel like obviously there's more money in making things harder and more complex. So, making taxes easy and clear, I feel like, that's a perfect world, but that doesn't benefit anyone except the society, the member of society. Doesn't benefit
Right.
the politicians who are getting the tax dollars, and not to get political, but you know,
Oh, that's
um,
fine. Let's do it.
the
I'll go.
government, yeah, of course they want more money, and it's basically you pay to play. Like I said, it's kind of like a game, and so if you can find someone who knows the tax law and how to actually do it in a way that's beneficial to you, you're paying to get that access and that knowledge, versus you just trying to go in yourself. Good luck trying to read a tax part of the tax code, because it's very confusing. And
Right.
so it's meant I feel like it's meant for that.
I
You know,
agree.
yeah, it's not, if they wanted to give you a flat tax on everyone, they would have done it by now. Wouldn't be that hard to
Right.
implement. There's a lot of
Right.
loopholes and rules that are made to benefit certain people, and the way you can actually become one of those people, you just have to learn what are those loopholes. They're legal ways to save money.
Hmm.
What are those ways, and how do I do it, right? And how do I become one of those people who has access to that stuff? And it's definitely possible. For You don't have to be super rich or wealthy to take advantage of some of those things that are out there. It's just
Hmm.
learning about what can I actually do and how do I do it, right?
Right. It's kind of like assemble. I see it as assembling a team. Like you have like my business partner and better half is much better, much more patient with reading documents and filling out paperwork. I'm a little better with conversation and this. And you, being, I consider, a very integral part of our team, are really good at what you do. And we, when we started working together, it was just like, yes, huge piece in the Tetris line there, and let's go forward and be, I mean, flourish. Um,
Yeah.
so, Ashley, at what point in someone's professional career do you think that they should start seeking out a CPA that specializes in helping small businesses, be it fitness related or otherwise?
Yeah, I would say it is going to vary by person, because some people will value having someone do that stuff for them earlier on than others. So there's not like a revenue number that I could give. It's really based on the person. Like if
Okay.
you are um if you're the type of person who you're like, I really don't even want to try to touch that or attempt it whatsoever, probably the earlier the better to have someone come in and do it right from the beginning. But if you
Hmm.
are more like, yeah, no, I have the time, I'll try to figure it out. Like, cheers to you. You can try to attempt it. Maybe once you're at, a certain place where you're like, okay, now I really need to take my time and like spend it on things that are revenue generating or whatever. Maybe you outsource that part of your business and find someone to come in and take care of it for you. So I think it depends on the person. We
Okay.
have clients that are under 100K a year, and then clients to multiple millions per year. It just really varies on what the person values, if they value that professional advice more than others. So
Got it. That makes sense.
yeah.
And would there be a client that you uh, draw the line at because they have too much of a business, like if you're going to work with like Shell Oil or something like that, just as
Yeah.
just as an example of a massive multi conglomerate? Like where do you draw the line at? What are your specific parameters for, like, where's your ceiling, where's your floor,
Yeah,
or
I would
if
say,
there are any?
yeah, I don't know that, I mean, because revenue is not necessarily a determination of if it's a fit or not. It can be if
Hmm.
you're super large. If you're a public company, like I'm not going to work with public companies. I also don't work with foreign. If you have any foreign things, like you have um, a foreign company, like we don't do that stuff anymore either. So it just kind of depends on the situation. But you could be 10 million a year, and that would be fine. It just depends on some of the other specifics. So someone who has multiple accountants probably not going to work with that. So I think it depends on the situation, not so much like the size. Because we have people, like I said, they're making 5-10K a month and they're focused on growth versus someone who's at 5 million a year and they're still growing as well. And even if they hit 10 plus, we'd probably still work with them because we already are familiar with their account. We kind of know, it's just a good fit. Like they fit into um, the things that we know how to do and stuff like that. So I think it kind of varies based on their
Okay.
circumstances. Yeah.
Like it's as subjective as the tax code.
Yeah.
Um,
Exactly. Yeah. Yeah.
so
Definitely. No
so
oil and gas. So just try to
right.
focus on the health and fitness space.
just an
So
just an example. I just what I could think of off the top of my head. So
yeah.
how at risk would you say small businesses are for IRS audits?
Yeah. I think 2024 and beyond, they're going to have a greater audit potential, but it does vary based on your entity structure and how you file your taxes. So, like a Schedule C, which is a single member LLC, if you're filing that form, you have a higher chance of audit than someone with an S corporation or a partnership or a C corporation. So, there's definitely an increasing chance as we go into the new year and beyond. But it also does depend on how you're filing your taxes as well.
So why would a C corp raise more red flags than an S corp?
So a Schedule C,
A Schedule C. Sorry.
Schedule C, because it's a lot of generally people who are a lot of times the Schedule C people will kind of round their numbers and just kind of say, oh, I think I made 80,000, and then they estimate their expenses. They're not at a level where they're paying someone to like do the books and have accurate records where it's like, this is exactly what you brought in, what you spent, and it requires less like professional services to take care of all the paperwork and stuff. So they just tend to get audited more because of like, just the facts of the matter, really.
Sure.
So another thing they look at is if you are rounding, like you're estimating your expenses, that's a red flag. Right. So if you're saying, oh, I think my merchant fees were $1,000 and my office supplies were $3,000. Well, they're all round numbers. So it looks
Hmm.
like an estimate. It's not exact. It's
Hmm.
not $2,984, so having those like
Right.
rounded numbers where it's all zeros or fives, that's a red flag because it does look like you just made up the numbers. You're not actually tracking what actually happened, which you have to actually report what actually happened. Yeah.
Right.
Yeah.
And so a Schedule C would be, now let's just, if we can translate that into like real people,
Mhm.
and we'll keep it in the fitness realm just to stay relevant. So I was working at Equinox for many years, and I had taxes deducted, and it was just it was a W-2 employee.
Yeah.
Um, if I were, when I stepped outside of that bubble, would I then automatically become a Schedule C
Yeah, if you're
person?
like you're now receiving some contract income, maybe you don't even have an LLC yet, maybe you just set one up, and you have not taken your LLC and turned it into an S corp or set up like a different corporation. And if it's
Mhm.
just you, like a sole owner, you're generally going to file a Schedule C. That's just like the default, right?
Got
So
it. Okay,
yes,
that's the
in that
default.
position, and I believe you guys may have been actually that when we started talking forever ago.
Probably
Uh,
because,
can't remember, but
I'm the
yeah,
opposite of you, where I was like, I like science. I'm going to be a trainer and I hate taxes. I will
yeah,
figure that out when the time
yeah,
comes. So you're a fresh eyed, bushy tailed trainer, and you're going to go and get the world by the horns. And you're a Schedule C person in the eyes of the IRS. What would be your recommendation to someone who is, because I got a bunch of friends who are like that,
yeah,
and I don't want to tell you the advice I've been giving them because I don't want you to say, no, Phil, that was wrong. So could you please just go? I'm pretty sure I was on the right track, but
yeah.
what would you tell them, if they're just kind of floating around and just receiving money and doing their thing?
Yeah, I mean, if they're just starting out and maybe the income they're bringing in is not that much, I think my advice to them was just make sure you keep, you document your income and expenses, you keep your receipts, so you can actually say, hey, yes, this is actually the income and the expenses that I reported, and here's my backup like proof. That's
Mhm.
probably what I would recommend if they are growing to a rate where they're if you take their income less their business expenses and it's 30K or higher, I would say it's probably time to like go into a different structure so you get off the Schedule C form, you get into an S corporation or something to get off that form. That's always recommended once you hit that $30,000 profit or more annually.
Mhm.
So that would be like that's always the goal is okay when you hit 30K we're going to get you over here because it'll make financial sense and it'll be better, for audit as well. So,
Right. So once they hit that 30K mark, would you recommend that they become an LLC or S corp, file that
yeah,
paperwork, and are okay?
probably an S corp. So I generally will recommend someone get an LLC once they start really their business. It's just better to, in California, you guys have the lovely $800 franchise tax. So just be aware of like, what does it cost to actually set up an LLC in the state that you live
Hmm.
in? So find out that first. So
Hmm.
don't just go file an LLC because you might have fees to pay. You might have other forms that you have to actually maintain with the LLC. So like figure that out first. But I generally recommend if you're running a business, get an LLC because that's going to allow you to go get a business bank account, set up your business credit profile, meaning eventually you'll be able to get like a business credit card and for it's like a long-term plan, right? And so
Hmm.
getting those fundamentals set up, you start to separate your income and expenses for your business away from all your personal stuff and have those not intermingled. Like, so setting up the LLC is actually a great step, just mentally and legally as well. Helps with, legal protection. They're not suing you, they're suing the LLC if that ever would happen. There's a lot of reasons to
Hmm.
get an LLC. And even if you're under 30K a year, like you still get it. And then once you hit that 30K a year profit, it's time to consider should I change my structure to be like an S corp or whatever for tax purposes? Like, does it make sense? And generally, if you're like a service provider, gym trainer, other health, fitness service provider, nutrition coach, whatever,
Mhm.
most likely go the S corp route. It just obviously it depends on the case, but most likely yes. So
And what does S corp stand for?
it's just basically a small business corporation. So it's like
Like small corporation. Okay.
yeah, so it's treated differently, but than a C corporation. The C corp is like what the public companies are. Um, Amazon, Nike, stuff like that. They're C corps. They're
Right.
publicly traded, whereas an S corp not publicly traded, but it has stock and stuff like that.
Got it. Okay. Um, and so all right, I think we can move on from that. That makes sense. I have been giving accurate advice, so that's good. It seems like
Great.
if you set yourself up as an LLC from a business standpoint, you kind of have more from the viewpoint of the IRS. You kind of have more rights or more lateral flexibility than just a Schedule C
So
member, I
creator,
guess. So,
sure.
would that be an accurate statement?
I would say that it looks more official if you are, you're not just operating under your name and your social security number. You're like, hey, I have a solid business and an EIN and it's all legit. And
Hmm.
yes, it looks more sophisticated basically, and it does set you up for a lot of other good things that you want to take advantage of as well: credit, legal protection, everything like that. So
Right. Yeah, those are two very very important terms. Um, so, as a just as a fitness entity, what are some of the low hanging fruit deductions that often get overlooked by small business owners?
yeah, I would say you know home office, being able to write off their workspace in their home, auto like mileage drive into if you're seeing clients in person, you're going to
Hmm.
networking events or masterminds, whatever. Um, you know, there's so many things that I think a lot of the main things are people just don't know what they can legally deduct, right?
Okay.
So I think it's just like kind of looking at like a lot of people don't know that like your computer and your phone and um camera equipment and gym supplies that yeah maybe you're buying maybe you want the jump rope for your gym, but like if you're using it for training, like you can write that off as a deduction as well as gym supplies. Like it just kind of depends, but there's so many things that you buy that are going to be used in your business that you for sure can deduct. So um
Right.
also there's other strategies that people can start implementing depending on their business structure. But if you have kids, there's multiple strategies with that. You own your home, there's multiple strategies with that. So it's really just kind of like finding what your situation is and like what things can we apply in your situation.
Yeah. That's a great segue. Actually, I was going to ask about if you do have kids. You know, how can you preferably put them to work for you?
Yeah, so yeah, you can actually have your kids work in your business. They're doing some type of task. Like it's like
Huh.
you're hiring someone else, like you pay them, they have job duties and they do the work and they get paid, just like another employee would. And generally the strategy is you can pay them up to the standard deduction amount for the year and it would be tax free. So the standard deduction amount varies by year. Like currently it's 13,850. So you could pay your kid that amount and that amount would be essentially tax free. It basically shifts it from your tax rate to their tax rate, which is going to be zero anyways, unless they have other
Hmm.
income sources. Um, and the way we do it where it's tax free is we generally set up like a separate little entity. This is kind of the one good time a sole proprietor is helpful, is setting up kind of like a little family office or LLC or sole proprietor. And the company, like if you have an S corporation, for example, you have an S corp and your S corp will pay this family office and the family office actually pays the child, right? So
Hmm.
that's generally how we do it. And that gets rid of social security tax, Medicare tax, income tax, all the tax. If you paid your child through your S corp, just straight up, you're actually paying Social Security and Medicare tax. You can't get rid of it. Okay, so you actually have to kind of move the money into basically to a Schedule C, right? To pay the kid from there. So yeah, so it's like the one good time the Schedule C comes in handy.
And at what age can you hire your kid?
So generally, like the things that have passed through the tax court have been 7 up to once they turn 18, then they have to actually start paying. You can't avoid Social Security, Medicare tax. So once they hit 7, I'm like, let's put them on. You could potentially have a child that's younger if they're doing something that makes sense, and it's reasonable. But generally, the tax courts have approved like children of age 7 and up. So that's generally what we kind of follow here. But you could have an argument depending on your situation.
What about toddlers that just boost morale when they're around?
Yeah,
because we got one of those.
Yeah,
everybody's very, very happy, and they just want to continue training. Exactly, it's an important thing. It is. I would argue that. Okay, so some of the deductions that are I guess I asked you about red flag deductions already. I don't think I did, actually. I think I asked you about low hanging fruit. How about red flag deductions? Just kind of things that the IRS is looking for.
Well, I would say a lot of
and if there are any.
Yeah, I think there for sure are. I think also a red flag is how much compared to your income, right? So if you are, let's say your income, you made 20,000 this year, and you're writing off, 20,000 in travel expenses and 10,000 in auto. I mean, it's gonna look kind of, if it's legitimate, great. But if you're just like, I'm maxing out my deductions, like, is the travel actually affiliated with making the income, or was it personal travel? Like stuff like that, they're gonna look at that to see like, okay, they're spending this amount, and compared to their income, it's like, the travel, the business meals, the auto, those can be a highly looked at area. If the amount is, seems a little unreasonable, then they'll look at that. Also, sometimes like legal, which is funny, legal fees get questioned often. And it's usually because people try to write off their personal, like legal service, like they're getting a divorce or they're dealing with child custody stuff. They try to write off the personal legal in their business, and
right,
it's kind of weird. So really anything that's personal, like if you cannot tie it to your business, like actually generating income or whatever, I would just kind of keep an eye on that. Obviously, you don't want to be writing off personal things, but I would say that they're definitely looking at those main areas, and then the amounts compared to income. Yeah. Mm-hmm.
Okay, so that sounds pretty straightforward. Just don't be a dum-dum with make the numbers match up, and don't push your luck.
Yeah, and if you are taking deductions, like I'm not saying don't take travel and don't take auto and stuff, like obviously if it's legitimate, like take it. But if they question you, then just be prepared to say like, state your position and like, yes, I traveled X amount, like this much, and this is what we did. And you just have to have some backup as to like what happened and legitimate deduction. So
okay, that makes sense. I've actually I think before we started working together, we were audited for some of those reasons, and the old accountants that we were working with were freaking out, and they're like, oh, it's an audit. I'm like, okay, all right, well, let's figure this out. And they were so the brains behind the operation, my wife, she keeps meticulous notations for things, and at notation rather, and she slid an accordion file across the table to these very traditional. We're in a boardroom, and they're on one side, and Apple Watch on one hand, and Rolex on the other, and and they we're kind of just sitting looking at one another, and we're prepared for this, and they're thumbing through, and they look up, and they said to Liz and I, they go, "These are some of the best notes we've ever seen. You guys are going to be just fine." We're just like, yes, all right. And so we took care of that audit. It was not a fun process, and combing through the past 2-3 years of expenses, I would recommend from experience, just do the little tiny tasks of recording receipts, and logging everything as you go, because it is a pain in the ass. But it can be avoided. So what are some of the potential penalties for over or under reporting to the IRS? What can people expect if they're kind of flying blind?
Yeah, I mean, there's tons of things. So the most common ones are failure to pay penalty, which is when you have a tax balance due. As a business owner, technically you pay quarterly throughout the year. During the IRS calendar quarters, they have a different quarter. It's not calendar year, it's IRS year. So you pay your tax due each quarter, and if you pay it later, that's fine. There's just basically pay a little bit more because you have a small, basically a penalty for paying later. You're not paying by the estimated due dates. Some people are okay to do that because the amount is so insignificant that people would rather just say, hey, I'll take the penalty and I'm going to go put my money in a high yield savings account, or I'm going to invest it, or I'm going to use it for other things I'd rather do. I'll just pay it, and I'll pay a little bit more when I file, and that's fine. So it's just personal preference. But that's one thing that you'll have is a basically late payment penalty. And then you'll also have interest. They always calculate interest on any amount due if you're not paying during those quarterly installments. Failure to file on time, depending on your structure. Like if you're an S corporation and you don't file an extension, or you file after 9/15, you're going to have a $205 penalty per month per shareholder. Each month.
$205. Where? Okay. So where does that number come from? It just seems like
they adjust it for inflation. It might be 210 now or this upcoming year. So
okay.
Same with partnerships. They all have different amounts, but basically, don't file it late. If you need an extension, just file an extension and have proof that you submitted the extension. So those are like the most common things. If you underreport your income, so let's say you have a Stripe account and Stripe issues that 1099-K at the end of the year, and it said 100,000 that you processed $100,000, but you reported 93. Well, now you've underreported your income because they're seeing a $7,000 gap, and they can penalize you on that as well. I don't know the exact rates right now, but it is, if you underreport your income, that can be a problem as well. Another major one is if you have employees and you don't pay the Social Security and Medicare tax that you withhold, and even the state and federal. If you collect the tax from the employee and you do not remit it, or you remit it late, that is a huge issue. So always make sure you pay those taxes. That can get pretty ugly.
Right. And what kind of, if you don't pay those taxes, they're going to come at you with the original amount plus interest, and are there going to be any fees on top of that, or have you had?
Yeah, there's definitely going to be penalties. I don't know the exact dollar rate right now, but I know that is one of the that and sales tax are like the ones you don't want to mess with those. It can get pretty bad. So if you have sales tax, take care of it. If you have employees, make sure your taxes are taken care of, because those are considered they're not your money. It is basically the government's money and the employees' money. That they basically need to kind of balance all of that. So if you're keeping it, you're basically like stealing from them. So it's like not good.
Yeah, that doesn't seem like they would appreciate that at all. It sounds like, if you get it wrong, they're going to make you wish that you had not gotten it wrong.
Just do your due diligence, make sure you submit it, get it paid, and
Absolutely. Um, how do you see AI factoring into determining audits? Do you see how do you see how do you see AI in the future role of the IRS, tracking habits and trends? Do you think we're a couple of
Mhm.
years out on that? What's your general opinion on that? Because it's it's a useful tool, but also John Connor's over here watching us make friends with AI, and we know how the Terminator ended.
Yeah. Well, yeah, I think there's pros and cons. I don't know that. I mean, the IRS is still using snail mail and fax, so they're like not super up to date on technology. But I could see AI posing a problem where you can have someone could mimic an IRS agent and send you some message demanding you pay or something, like stuff like that where they're imitating
Mm-hmm.
the IRS. Like I could see that becoming a problem where they're using AI to basically speak or send a message like they're the IRS or something like that. So I
Right.
could see that being a problem. I don't know that the IRS is going to implement AI. Like they're so far beyond. They're like back in the 50s still. It would be great if they could like figure out electronic stuff first. um,
How
that
to
would
send
be
an
that would
email?
be yeah, that would be great. I think they're like they realize they need to do that. I feel like they're working on like online portal stuff, but they're just so far behind that like I'm not really worried about it on that side.
Okay.
More so like on imitators and people trying to scam you, send fake
Right.
letters. Like
Right.
how often do you get letters in the mail when you open up a new LLC and they're like, "Oh, get your labor poster. You must do this, otherwise you're penalized." And it's just a business model. They're like scaring you into
Right.
paying for this labor poster that you can just print out online for free. You know what I mean?
Yeah.
So stuff like
That's
that.
interesting. I've fallen prey to that scam. It's only like $25, but if you're sending it to a few
Exactly.
million people, that's a pretty good business. Interesting.
Anytime
Okay.
you Yeah, anytime you file a new LC, they also do it for if you file a trademark or
Yeah, oh
you
yeah, I know about that one. They
buy
come
a
out of the
house.
woodworks when you do that.
Yeah, they have
What
all
was the last
sorts of
part?
things. I was gonna say anytime you do a trademark or you buy a house, you have
Oh, buy a
similar
house. Okay.
ones for that same. Yeah, they because it's all public record, so they're constantly like spamming these people who do these things. So yeah, all the time. It's
Okay.
nuts.
Well, so we're not really worried about AI just yet. Maybe in 10 years, maybe in 20 years when uh
Yeah, not
when
for
they
the
catch up.
IRS. I wouldn't.
Um
Yeah,
okay. That's good. That's good to know.
yeah.
All right. Well, is there are there any kind of closing thoughts that you'd like to share with anyone, any of our listeners or viewers, um, as related to what we've been talking about today? Anything you'd like to share? It's like, hey, don't do this, do that.
Yeah, yeah. I think in the beginning of the call, you said there's a lot of fear around taxes, and fear always comes from the unknown, like the things we don't know. We're not, you know, experts in a category, and so there's some fear and uncertainty there. And I think if you want to get over that fear, you need to kind of lean into it, and that may mean finding someone who can make it easier and less stressful for you. So I definitely recommend that. And don't be scared of the IRS or taxes or what you need to do. Like you can find someone who can help you. And then once you like know what is going on and what needs to be done, you're gonna feel a lot more at ease. So just kind of like taking that step to like figure out, okay, yeah, this stresses me out and I'm worried about it. Like, what do I need to do to change and to be more comfortable with it, right? It's the same thing with like looking at and talking about money. Like a lot of people
Right.
don't like to do it. They don't want to face the reality that they have debt or that whatever they don't. I don't know any of that stuff. It's just we have to
Yeah.
face it, and like once we start facing it and dealing with it, it gets a lot easier and it's not scary anymore. And now you're like, yeah, I know it because I tackled it. So it's just a hurdle you have
Yeah.
to overcome. So I would challenge everyone to, you know, challenge themselves and just say, you know what, I'm gonna find someone who can help me kind of overcome it and get it under control, and then you'll be
Yeah.
good. So
I think there's a certain literacy that people need to kind of face, and how they tackle these things financially, financial literacy, which I think is a huge part of what you do. And then literacy with the tax code, where you have an expert like yourself guiding you, through these decisions. And I think that is something that people are, exactly what you just said, are uncomfortable. It's an uncomfortable pill to swallow, but once you do, and as you learn, along the way, it opens up so much more opportunity for you to, navigate the world in a legal and kind of vibrant way. So where can people find you if they are listening or watching and they're saying, like, I think we should have a conversation. Do you want to share some creds?
yeah, you can probably find me on mostly Instagram, any social media really. It's Ashley Shepard CPA, same handle across the board. So you should be able to find me on there. I would say Instagram is a great place to start.
Okay.
Yeah.
And then in your Facebook profile, are the talks that you put out, are those reserved for your clients, or are you or do you put out kind of free content as well? I'm not sure how that's structured. I'm asking just from a standpoint of ignorance.
Yeah. Yeah, I do have a Facebook group from a little while ago that has a bunch of content in there you can join, and it's free. So that's definitely available to anyone. So if they want to jump on Facebook, then I have a group for health and fitness entrepreneurs in there. And that's totally free and available.
Well, Ashley, thank you so much for taking the time and educating all of us. I really appreciate it, and I know everyone watching and listening does too. So you have yourself an amazing day, and we'll see you out there. Okay.
All right. Thank you. You too. Thanks for having me.
If you found the content interesting or helpful, please like, subscribe, and share. We'll see you out there.